We are half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne. Our top stories this morning. Asian stocks following Wall Street's rebound as investors look beyond politics to really focus on fundamentals and tech earnings coming up. Kamala Harris consolidating support from top Democrats, promising to unite the party and defeat Donald Trump. Also ahead, we hear exclusively from the CEO of Chinese EV maker Zeekr about their plans to avoid EU tariffs and further its international expansion. Plus, a look at how Xi Jinping has cemented his role as China's, quote, chief economist, shrinking space for debate. All right, well, it looks like we are tracking sort of these U.S. gains here this morning, this rebound that we saw on Wall Street. Asia seems to be feeling hit there this morning and really shrugging off maybe the political shakeup and political noise that we're hearing from this U.S. election as well. Now that we have heard that Kamala Harris seems to be rallying a lot of Democrats to endorse her as well, that certainly is leading to maybe markets tilting more towards fundamentals. Let's talk about the tech earnings coming up. We have, of course, that Fed's inflation gauge coming up later on this week as well. GDP numbers. So really focusing more on the data as well. You take a look at how equities are doing. You're basically seeing some decent gains when it comes to the Kospi, TAIEX as well, just opening up. There you go. We saw quite a bit of a decline yesterday in Taiwan. Looks like we're setting for a bit of a recovery there. Taiwan Semi, there you go. We're up some 2%. Yesterday was really about that chip sell-off that seems to be lingering. We'll see if that can actually lasts here. But interesting to know about the dollar moves. We're softer on the dollar, but really we've seen dollar yen has been lower. So we definitely see strength coming back to the yen. The Aussie, though, has been a little bit heavy. I think we're down for a 6th or 7th day now. And basically the longest losing streak we've seen in 11 months on tumbling commodity prices. So we saw that drop in oil overnight. We're back to around $82 for Brent. Copper is also at these 3-month lows now. So there is a bit of disappointment when it comes to, the macro picture in China. Obviously, there was still a bit of disappointment from the third plenum as well. And we're focusing on what this moves in the dollar really mean, right? Our question today yesterday was, does a Trump presidency really mean triumph for the dollar? And most of the big banks actually think yes in some ways, despite some of the rhetoric and the former president favoring a weaker dollar. Barclays was saying the tariff risk alone, if you just look at that, that's enough to argue for a dollar rally as well. You take a look at how things fared. Obviously, ADRs were doing pretty good overnight in China and in the U.S., I should say. And there you go. We saw that pop of 3%. So maybe that bodes well for the China tech story here today. There were some gaming approvals that were approved from China as well. That certainly could help some of the game makers like Tencent. So we're focusing on those large caps once again. A50 futures are punching higher this morning. And we're watching the CGB market after, it was interesting, right? The CSI 300 yesterday actually snapped that 7-day winning streak despite those surprise rate cuts from the PBOC. Rates are not doing a whole lot here right now, but 7.29 for dollar China here this morning. That fix could be quite important as well here today. In terms of what to watch in China, some technicals when it comes to H shares, HSCI, the 100-day moving average, which we're getting around or close to. We talked about those video game stocks here, so might be getting that tailwind from regulators here today, the likes of Tencent, NetEase as well. There is a 3- and 60-month bill sale coming through from Hong Kong. And of course, we've been talking about this as well, the launch of the Hong Kong inverse Bitcoin ETF today as well. And we also heard to the latest when it comes to this U.S. election, right, from Vice President Kamala Harris speaking at her campaign headquarters in Delaware as she prepares to take on Donald Trump in November's general election.
Because we love our country, right? And we believe in our foundational principles. We believe in freedom and opportunity and justice, not for some, but for all. We are going to win. So in the days and weeks ahead, I, together with you, will do everything in my power to unite our Democratic Party, to unite our nation, and to win this election.
Let's bring in Bloomberg's Vonnie Quinn. She joins us from Washington this evening. And Vonnie, it's been a little bit more than 24 hours since the shocking news. It seems like Kamala Harris has been working the phones, certainly. Is the path to the nomination much clearer now?
It's very, very close. In fact, Yvonne, we're anticipating in the next few hours even she'll secure the more than 1,976 delegates that she would need in order to fend off any kind of a challenge. But it doesn't seem like any kind of a challenge is coming now anyway. She even got some more endorsements from party elders such as Nancy Pelosi, who had been holding back just a little bit in the last few hours. So we know that Kamala Harris is very likely going to be the nominee. And you heard her there speaking to her staff at what is now the Kamala campaign headquarters, right? She's branded herself Kamala as opposed to Harris at this point. Biden called in. It's the first time we had heard from him since he went into quarantine. He called in to say that he was extraordinarily supportive and that he would be on the campaign trail, that he'd be carrying out his duties as president over the next 6 months, but that he would be fully engaged in trying to get Kamala actually elected. Now, we also know that he is going to leave his home in Delaware tomorrow. That would be Tuesday in Washington, D.C., scheduled to arrive at the White House at 2:30 local time. Presumably, he will then speak to the nation at some point, as he has promised. Harris herself is going to travel to Milwaukee for a campaign event. And you heard it there in the excerpt. She has already started campaigning. She's tipped her hand at how she's going to run this campaign. On the one hand, she did attack Donald Trump and said in her former role as Attorney General that she had seen all manner of predators, fraudsters and cheaters. And she said, so hear me when I say I know Donald Trump's type. But you also heard her there talking about uniting the country and campaigning for everybody. It suggests that she will get to policy issues pretty urgently on the campaign trail.
And the VP pick, that's still up in the air right now. What's the latest on that?
Still up in the air. We did hear from some more of those governors that had been bandied around as names for potential VP picks. They're all still in the mix, it would seem. As we know, Gretchen Whitmer doesn't want the job, so she has basically taken herself out of the running for that. But all of the ones from swing states that we heard about from Kentucky, North Carolina, Pennsylvania, Josh Shapiro, they're all still in the mix. Sandy Bashir. So we will keep waiting. It does seem like we should get a VP pick before the DNC, which begins August 19th. We're looking at maybe the first week in August, but it could come at any point. It's a calculation, really, as to who she would need, whether it should be a governor from a swing state. And the data suggests that sometimes that's not actually helpful in winning a swing state, that perhaps maybe she should make the decision based on personal relationships more than geography. So she'll be taking all that into account. The FBI has begun vetting all these candidates as well. And then, of course, there's donations. As we know, they've been rolling in. And as you say, it hasn't been that many hours, but already we know that Roger Altman of Evercore, Reid Hoffman of Greylock Partners, Lazards, Ray McGuire, Martha Lasry, Abigail Disney even told the New York Times she is, quote, supporting Harris with all my heart. So those donations are rolling in. It seems like everybody is getting on board for the next 3 to 4 months before this election actually takes place.
And in terms of for Harris, I mean, who is she looking to target in terms of, you know, attracting? Is it swing voters? Is it the black vote? I'm just wondering, you know, is this going to be a fresh challenge for President Trump, and how is his campaign dealing with this now?
It's absolutely a fresh challenge for President Trump, and you can tell by the amount of invective that he is putting out on social media that this is troubling to him, right? So suddenly it's going from, you know, an age-related campaign when it comes to Biden to an age-related campaign when it comes to Trump himself. He's not going to like that, right? The 78-year-old facing off against a 59-year-old. He's taken to calling her Kamala dumb as a rock Harris. So he's already going on the attack in a very mean way. And obviously, he's going to have to change his messaging. She's going to get down to business when it comes to talking about him as a former attorney general, a former prosecutor who's prosecuted these fraudsters, these cheaters. She puts on the line the fact that he has been found guilty in many, many instances. And the Trump campaign is definitely going to have to get into policy issues very quickly as well. Obviously, we know immigration is a huge one for them, but they won't be so ready for the women's reproductive rights and abortion issue, which is one of her fortes. She is strongly for reproductive rights in all 50 states. It was one of the things that she talked about at length when she was talking to her campaign staff today. And the Trump campaign is going to have to spend a lot of money and tackle this issue head on.
Bonnie, thank you, Bonnie Quinn. They're staying up late for us, joining us from Washington this evening. Let's bring in Joshua Crabb. He's head of Asia APAC equities at Robeco. He's here in Hong Kong with me. Yeah, it's interesting, right? Just, the last few days, we basically were focusing on these Trump trades, and now it seems like markets have stabilized a bit. How do you kind of cut through this political noise now that's happening in the U.S.?
Yeah, I think this is going to be an interesting period of time. It sort of feels like we're going to have an election tomorrow. But we're talking about 100 days down. And it just goes to show the environment we're in. This, obviously with the change in the Democratic Party leaders, going to have an impact on uncertainty. We're going to see lots of this debate continue. Hopefully it stays a little bit more focused on the US for now. But as we get later into the, towards the election, probably geopolitics comes back into it. And what that means is we're going to see a lot of volatility going around. For us, it's very hard to try and judge that. It's very hard to judge what these people are going to say. So what we have to live is with the aftermath in the market. Now, what's been interesting, as you said, like with the Trump trades, we've seen, like I say, a lot of the exporters be hit. Particularly in China recently. Now, for some of those, there may be some validity and uncertainty around that.
Yeah.
But for some of them, they're perceived as exporters, but you may have a lot more of a domestic orientation. So within that volatility, it can throw up some opportunities as well.
That's interesting. So they're seen as exporters, but they're not. How do you parse through those? Because people are saying, look, it really depends on whether we actually get those 60% tariffs that Trump is actually mulling. Is this something that you're expecting as more of a phased sort of approach? Should we not be too concerned about that tariff threat? Yeah,
I think there are a number of sort of issues here. So this has taken a different dimension. So first of all, it's around the US and the election that's happening there. But then there's also, like a lot of exposure maybe to Europe. And then there's, what's going to happen with the tariffs in Europe. And then the next question will be what's going to happen into some of the emerging markets. And I think this is where understanding how those different parallels are going to be drawn and where those businesses will be a little bit more protected, because they all tend to get sort of hit at the same time and roughly by the same amount, and trying to work out where you think those differences sit will create some opportunities.
Something else that we've seen, may not be Trump related, but it could be, is the sell-off in chips globally. In the U.S., it's a rotation into the small caps. In Asia, maybe it's a more broadening of this tech rally. But, is it something that you think has legs, or do you think, it's still good to stick to those AI winners?
Yeah, this is an interesting debate and one we have internally ourselves. We know AI is going to continue to happen. The question is how are you going to make money out of that? And it's sort of interesting to look at the sort of, likes of the big clear plays on this in the US, and you look at the sort of market cap dominance they have, say, compared to, like the likes of Cisco back in 2000. So we know that we are in that sort of momentum part of the market. So I guess for us, we think that it is going to continue to be a trend. There is a risk that it comes off, and then you've got to look for what we see as those plays as that implementation comes in. I mean, day to day, how much does AI impact your life? So at the moment, what we're seeing is a lot of that infrastructure spend going in, and we think like trying to work out where that actually starts to really permeate into businesses, the companies that can benefit from that, is probably going to be a more important next phase, rather than just seeing one or two companies completely dominate the space.
Yeah, don't just stick to the hardware
and the market cap.
Yeah.
Yeah, because, if it doesn't have that sort of, again, it's a bit like if we go back to the internet build out, the internet kept being built out, but the companies that you made money out of started to change.
Obviously, the Fed discussion is all part of it. I'm just wondering, given just this U.S. election uncertainty right now, do you think the Fed can still, given what the market's pricing in, cut in September now? Because that seems to be why equities are still getting that support.
Yeah, again, there's a political element to this as well. People think they may or may not do things around the election and whether they hold back. For me, again, the beginning part of this year, we were looking at 8 cuts and everyone was super happy about that. That seemed unrealistic.
Yeah.
Then we went down to sort of 0, and that sort of seemed maybe a little bit unrealistic as well. And now we're at, 2.6 cuts, right?
Yeah.
So I think that probably is something that's sort of a bit realistic. When it happens is a bigger question. But for me, what sort of has seeped into markets now is not just about whether we get the cuts, because the cuts were considered a positive for the market. And I think now where the mindset is if we're going to get more cuts, which is good for the market, what does that mean for the economy?
Yeah.
What does that mean for earnings? And that's where that sort of debate has become a bit more balanced, which I think is healthy.
We also got cuts from China yesterday, surprisingly, but the market didn't quite turn too positive on that note. I mean, what are going to be the key drivers for this China rally to resume itself right now? Because it seems like there's still a bit of disappointment around the third plenum. Yeah, so I think, what if we've had the plenum, and again, that sort of tends to be quite high level to start with. We've had a lot of documentation start to hit the market. People are going to pick through that, see what that means. The nature of the plenum is it tends to be much longer term, so you don't get that immediate reaction on market. And again, it's like a 10 basis point cut. Yeah.
Is not something that's going to change, the markets overnight. high. It's another incremental step in that sort of, that sort of benefit. So for us, we think people still looking for those big bangs for something to happen on property is probably the wrong way to focus at it.
Yeah.
There are certain areas. We know Apple's coming out with a lot of, new products coming into September. That will have some impacts around that supply chain, picking the winners there. Maybe something that could be quite interesting. We also think some of the pharmaceutical stocks, again, this is a part of the market that gets a bit ignored. We are having a lot of, again, self-sufficiencies, not just in tech, but also in things like in pharmaceuticals, and there are some select opportunities there as well. Yeah. And again, stepping back and looking at some of these, big companies, defensive sort of earning streams, where they're starting to pay out more to shareholders. So there are various angles that we think will be stock specifics to look at.
We've had a few strategists say it's time to trim holdings of SOEs because you're not going to get those payouts maybe pushed back to later on this year. I mean, how should we be looking at these SOEs right now? And are you getting much traction from clients and interest in clients in these SOEs?
Yeah, I think what I would say with China is I think, it's had that sort of, moment over the last few years where, people have sort of come to understand we're going to have a lower period of growth where things like real estate has come under a bit of pressure. And what I would say is you've still got some clients are sitting on the sideline. Most think it's cheap enough. Yeah. But the question is what's the catalyst? So I think you are seeing select clients at the margin starting to dip their toe in, but we haven't seen that in a big phase yet.
Okay. Joshua, we'll leave it there, but thank you. Joshua Crabb, head of Asia Pacific Equities at Robeco. That renminbi fix just crossing your Bloomberg here right now. It's 713.34. So we're not seeing a whole lot of movement in the currency here right now, but obviously, just given what we saw from the PBOC, it seems like there is a little bit more tolerance towards a weaker renminbi and even weaker or lower rates when it comes to CGBs here right now as well. We're also counting down the opens of trade in Shanghai, Shenzhen, and Hong Kong. Futures are punching still in the green here this morning. We'll count you down to the open in just about 14 minutes' time. This is The China Show. All right, we're taking a look at how futures are looking at, and it looks like we're tracking this sort of rebound that we're seeing globally here today, even in China, despite some disappointment yesterday, despite that PBOC rate cuts, the LPR cuts, and even, still focusing maybe on the third plenum disappointment as well. So, yeah, we're seeing futures up about 0.25%, 729. No really change in that fix here this morning either. But let's talk a little bit more about China's overall government spending that fell in the first half of the year, and that's compared with what we saw with 2023 levels, and it's a decline that risks holding back the economy's ability to reach Beijing's official growth target. Let's get to our Asia government and economy correspondent, Rebecca Chung-Wilkins. She's with us here right now. What does this number tell us?
Well, it's really all about local government spending being pulled back. So local government spending fell just over 4% in the first half of this year, and it could not make up for that shortfall in central government spending. So that actually came up quite a ways well into positive territory. But still, we had this overall drag around 3%, and the deficit overall, again, wider at over 3 trillion. So really, we just see this reluctance to spend among these local governments. And of course, many reasons, it's very understandable why the property crisis is continuing to drag on. Now, it also sort of, I think, helps make sense a little bit of some of what we saw at the third plenum. This emphasis on tax reforms, this emphasis on trying to essentially transfer more of that wealth from central governments to local governments. And in fact, this is one of the first times where we've seen that sort of transfer happen that isn't engineered around debt. So if you think back in the 90s when they were strengthening up the central coffers, they also allowed then LGFEs, the first of LGFEs started to issue debt. Again, that happened in 2013 when we saw reform to fiscal finances, local government fiscal finances. They were allowed to issue local bonds. So this is a sort of different way that they're trying to bolster the coffers for local governments, essentially to fix this problem, to get them out, to get them spending again.
Yeah, and I think people are still wondering how they're going to implement it. But, it really does show that, what Stephen Roach said, that President Xi might be that chief economist of China. Now, to what extent do you think this sort of top-down policymaking is working?
Yeah, I think certainly we have seen, of course, President Xi Jinping cementing his control for the last decade in power. And with the absence of these figures like Li Keqiang, who was associated with a rival base that was pro-market reform, as well as the absence of these figures like Liu He, where a lot of people had lively debates. There was a lot of back and forth. And sometimes, of course, that led to deadlock, a lack of decision making. And so it wasn't necessarily always the most efficient policy making, but there was a lot more discussion. We've spoken with economists and other folks who typically sort of were involved in some of these debates and some of these meetings who say there is a sort of marked change before and after in the current sort of cohort of President Xi Jinping's policymakers. They talk about, for example, Li Qiang, who typically still holds these regular seminars, but says that, of late there has not been an economist who represents a foreign institution at those meetings. They also say that there's less debate and it's less lively than it used to be. And so even when we think about a figure like He Lifeng, who replaced Liu He, people say there isn't as much clarity on his economic thinking, his economic philosophy as some of that previous cohort, even though he seems to be sort of quite practical in the areas to make changes where he can.
All right, Rebecca, thank you. Rebecca Chen-Wilkins there, our Asia government and economy correspondent. And we're taking a look when it comes to the pre-market. That could be opening up pretty soon here in Hang Seng. There you go. We're up about 1/4%, so punching some decent gains here this morning. We got the endless actions in your preview coming up as well. What to watch here today. Plenty more ahead. This is Bloomberg. Some top geopolitical stories that we're tracking today. China is removing sanctions on U.S. communications firm Viasat after Beijing targeted the company over proposed arms sales to Taiwan. The Chinese Foreign Ministry says it's because the situation has changed since measures were implemented. Viasat operates several subsidiaries in China, including a local branch of Inmarsat, which is a British satellite services provider. Philippine President Ferdinand Marcos Jr. is outlawing online casinos catering to Chinese gamblers in his annual address. He banned all Philippine offshore gaming operators with immediate effect, with directed managers to find new jobs for displaced employees. The sector flourished under his predecessor, Rodrigo Duterte, who steered Manila's foreign policy towards China. All right, speaking of the geopolitics, an interesting note coming out of Citi here this morning and really assessing what the potential threat of Trump tariffs could be if, in fact, he goes forward if he does become president, imposing those 60% tariffs on Chinese goods. They're not too concerned, right? There's several reasons why. When it comes to U.S. raising those tariffs, they think it's going to be selectively with less for sectors where U.S. value chains are not ready. Chinese products are often very cost competitive as well, and also certain incremental costs could be passed through product price rises. So certainly, the whole de-risking of China, that's certainly something that people focus on. More production capacity could be relocated outside of China also. So that's certainly the call from Citi here this morning. In terms of what this means, obviously we're tracking those Trump trades here this morning and really not seeing that. Really, the market narrative seems to be more focused on fundamentals, earnings. Can we get back to kind of focusing on the Fed here once again? But take a look at how this rebound is tracking here today in the Hang Seng. Marginal gains here we're seeing in the pre-market, about 1/4% to the upside. And we're watching, of course, 8 shares are up about 1/5%. Game makers are doing this here right now, so seeing decent tailwinds here for the likes of XD here after China approving 105 gaming titles as well. BYD with the Berkshire Hathaway still cutting that stake now to less than 5%. The Open is next. Welcome back. You're watching the China Show. We're counting down the open of markets here in Hong Kong, Shenzhen, and Shanghai. It looks like we could be seeing a decent day across these greater China markets here today. There is an overall sort of rebound that we're seeing globally as well when it comes to equities. It seems like investors now really shrugging off a little bit more of the political risk in U.S. and maybe focusing on more interesting, more fundamental things as well. So certainly that is helping sentiment at least a little bit here today. And yesterday was really what we saw, the disappointment from that PBOC rate cut yesterday in the onshore market, where we actually snapped out of 7 days of gains in Shanghai. So if we are likely to see that, it's going to be interesting to tell what investors are really thinking about post-plenum as well. Hang Seng is up about 1/4% here right now. So certainly there's not a whole lot of catalysts out there, to say the least. But really, we're focusing a little bit more maybe on gaming approvals, the like there. So yesterday really was the SOE sold off a bit, given some of this disappointment of the plenum and the like. And you're seeing really some of these large caps not doing too well at the get-go. And there you go, CSI 300. We are seeing just in the get-go, just 2 days of losses already here today. So Kweijiao Maotai is slightly on offer here. Watching some of these big liquor names as well. Wu Liangye, Jimaozhou, after some of the earnings that came out that disappointed, there has been some analyst actions around that. And small caps not doing too well this morning as well. CGBs, though, you're still catching a slight bit in the other part of the curve, but certainly it continues to be this rally that might have resumed after those rate cuts yesterday. You take a look at how Hong Kong is doing. We've been focusing on, obviously, oil majors, also some of these copper miners, just given what we've been seeing when it comes to oil prices and commodity prices of late here. But there you go. You are seeing at least China Tech is doing decently well. 10 cents up some 0.7%. We talked about those gaming approvals as well. AIA is doing about 1% here right now. Not really that much change in dollar China here this morning, but it is on a little bit on the weaker side at 7.29 levels here right now. But Hong Kong doing a little bit better than onshore. You take a look at how it's really moving. We talked about the SOEs yesterday, so it was like the PetroChina that fell quite a bit in the A-share market. But right now you're seeing, given where oil prices are, we actually are seeing oil prices doing okay, or oil majors are doing okay here. But copper is at those 3-month lows. It doesn't seem like that's deterring or changing much of some of these miners' mindsets here this morning as well. And we talked about the online gaming stocks. Tencent NetEase, certainly I think more than 100 games that were approved by regulators in July. NetEase doing a little bit better. XD is seeing gains about 1%. It said he had an interesting note, too, from Alicia Yap, saying that, this latest batch of domestic gaming approvals signaling a supportive and stable regulatory environment as well. So their expectation of 1,200 to 1,400 approved games this year, quote, remains on track. Let's bring in our team now, Catherine Nye, who leads our Asia equities coverage, to walk us through what her team is looking at. You've been focusing a lot on this chip sector, the sell-off that we've seen in the U.S. that seems to be you're seeing really pronounced moves of late. What are analysts telling you about what's next?
Right. So, yesterday, the fourth day of losses for the Bloomberg Asia chip gauge, which was, I think, the longest losing streak since 2020. I mean, this is a sector that's been really, really hot. I mean, the AI play has really lifted this AI play has lifted kind of all sails in that regard, and seeing the likes of, TSMC rise above a lot of its, U.S. peers. I think there's probably a reckoning of sorts, right? People are saying, we love the AI play. This is obviously the hot thing, the topic du jour of the year, but there's just a lot of crowdedness in this area, and then people are trying to find a little bit of value, right? Morgan Stanley yesterday came in with a note downgrading some of the sector and saying, it's time to take profit, and I think even with today's sort of, us in the green, there's still a lot of concern about whether, this is just too heated and where else is there value. So now people are kind of thinking, well, what kind of tech AI tangential things can I buy? Where is their value? Is a rotation out of certain countries, let's say, or certain areas into other areas that still have a little bit of potential?
Yeah, and it seems like when it comes to Chinese markets, it's, the third plenum, we didn't get that big reform bang that people were possibly expecting here as well. What are still going to be the next catalysts? We still have a Politburo meeting to deal with, too.
Yes, exactly. So the Politburo meeting sometime maybe in the next week or so. We're not exactly sure when it's going to be, but I mean, that should have a little bit more guidance in terms of clarity. We're still waiting for this kind of document that usually comes a few days after the plenum to really kind of dissect sort of the policies that are put into place. I think right now, watching for this Politburo meeting is probably the first milestone. Earnings are always, a good indicator. They're coming around the corner. Some of the preliminaries, a little bit of a mixed bag, but I think that that'll really show you it's probably pointing down to a down arrow, especially in areas like consumer. I think that's a kind of a big topic. And we've seen, likes of Hugo Boss and Porsche talk about how weak the China, growth and outlook is. So, I mean, that'll be sort of more solidifying ways of looking at the market. And unfortunately, there's not a lot of upside unless we see something more substantial. But I guess we'll find out in the next week or so.
All right, Catherine. Thank you, Catherine Nye there, who leads our Asia equities coverage. And really, we've been focusing on this PBOC move yesterday to really cut that 7-day reverse repo, the LPR, which followed minutes later as well. So despite, though, that 10 basis point interest rate cuts in China, Bloomberg Intelligence thinks it's unlikely we're going to see a boost when it comes to new home sales. Let's bring in our senior real estate analyst, Patrick Wong. He's with us here right now. So tell us a little bit more about the impact of these rate cuts, if any, Patrick.
Yeah, this is a 10 basis points rate cut. So it's not come to a really big surprise, honestly, but it's see the rate is cutting a little bit down further. But having said that, I think the challenge is that now it's not just about the interest rate, because when we look at the mortgage rate right now for most markets, right, in mainland China, we see is only 3.4%, or even some of them even lower, right? It's already even lower than Hong Kong, right? We see, right, for the mortgage. But having said that, I think the challenge is now is about the fundamental, because it's more about how the potential buyers, they can have the job security, there's unemployment issues, they're going around, and also the overall economy is not that good. So it's actually more about that kind of impact affecting the short-term recovery of the housing sales. So still have a challenge.
Yeah, and China has rolled out a series of these measures, right? Like, purchasing unsold property for affordable housing to support the property market recovery. Do you think those measures will be enough to really boost the market?
Yeah, we published a new analysis today, and then we highlight that you need at least 1 trillion yuan to support the whole program. But the thing is, even we have this 1 trillion yuan, that we can just buy about 50% of the inventory overall. So that's still not enough, right? We need 2 trillion yuan. But the thing is, we have the target for the public housing is 3 million units. That for this year, next year to be completed. That for affordable housing, that is something that I think the government want the city government to help to support the delivery of those 3 million affordable housing. So the thing is, if we have that kind of things, that we need more money. But the current program is just 500 billion, so still not enough. I think you need more than that. So it's a big challenge.
Yeah, and it's interesting. We've been talking to a lot of analysts that say, at least when you're seeing signs of some sort of recovery, the first tier cities is where we might see most of the impact from this stimulus. Are there certain developers that you focus on that might be able to benefit the most from this sort of, inventory program?
Yeah, I think the major cities still the major benefit that. Because for really smaller cities, I think the challenge is that even they have the affordable housing being acquired, but the thing is, first of all, the city government, did they have enough money to do so? So whereas some major cities, they still have more resources to do it. So that's first thing. So under this backdrop, right, so major cities, if we talk about something like those state-owned developers, CR land, or some major Vanke, Longfor, they are focusing on major cities, they will benefit a bit more than some of the others. Like Country Garden is focusing on lower tier cities, still a bit challenging on this backdrop. Yeah. Okay,
Patrick, thank you. Patrick Wong there. Their report, of course, on these affordable housing. Well, how to convert that to affordable housing is out on the Bloomberg terminal here right now. Bloomberg Intelligence senior analyst Patrick Wong joining us. We got plenty more ahead. This is Bloomberg. Welcome back to the China Show. Here are some of the big corporate stories we're following for you today. Delta Airlines says it expects to cancel more flights this week as it tries to recover from a crippling technology outage. The airline canceled more than 800 flights on Monday, bringing its total since Friday's meltdown to more than 4,600. More than half of Delta's worldwide IT systems rely on Microsoft's Windows operating system that was affected by the software error. Warner Brothers Discovery has offered to match Amazon's bid for U.S. National Basketball Association TV rights. Now, the NBA is on the verge of signing a new $76 billion 11-year deal with current broadcaster ESPN and two new partners, NBC and Amazon. The league confirmed it's reviewing Warner's proposal, which was made under a matching rights provision in its expiring contract. And Berkshire Hathaway has sold off another block of BYD shares, taking its stake in one of the world's biggest car makers to just under 5%. Now, that's down from more than 20% 2 years ago. And dropping below 5% means Warren Buffett's firm is no longer obligated to disclose any further sales. Buffett saw a 2,000% gain from his early bet on BYD. And Hong Kong is playing host to a new type of Bitcoin exchange-traded fund and allowing investors to bet against the original cryptocurrency. CSOP Asset Management CEO Ding Chen talked to Bloomberg's Tiger Money podcast about Asia's first crypto-linked inverse ETF, which is launching today.
We try to introduce this new asset class to our clients. At this point, we try to introduce inverse ETF to the market. And one of the most important reasons you already mentioned, Rebecca. So it's like you said, Donald Trump is obviously a big fan of Bitcoin. And the people say, the Bitcoin price might goes to like 100,000 very soon. And but from the market, we all see the big rallies for this asset class for the past 1 year. And we think, for some of the investors, they need to have either control the risk or take another position of the Bitcoin. But right now, for Bitcoin, it's not that easy to open an account, to trade futures, to get negative position, or to inverse to short Bitcoin. So we try to introduce this daily rebalanced one-time inverse ETF to the market.
There's a ton of demand for this specific strategy as part of broader strategies, or if you take a simple call on market direction. Do you have an initial projection of how much AUM you think this specific product might start to inhale?
As an asset manager, AUM obviously is the most important thing for asset managers. But right now, we're doing leveraging inverse products. We pretty much all of our leveraging inverse product, no matter how big it is, we are all start with a very, very small very small seeding. Something like, at day one, something like 5 million to 10 million. Normally it's the starting point. And as long as the market, favors this sort of strategy, people feels that this strategy has good liquidity, can help them to either, to enhance their risk or whatever, and or take other positions. So the AUM will grow, yeah. I think 70 million is not a big number.
So as one of the largest players, where's the AUM coming from, and what do you project it to be by end of year, in 1 year, 2 years' time?
For the inverse one, it will be very, very interesting because it's also the first inverse Bitcoin ETF in Asia. Because at that time when we introduced the Bitcoin ETF, future-based Bitcoin ETF, I think the market is on the bottom. And right now, with the huge rally, that it's not that cheap. So we think we can, have decent numbers, from here. But at day one, I think when we launched at day one, when we launch this inverse ETF, the number won't be big, but I think 50 million, 100 million is definitely achievable, giving us 1 or 2 years.
Easy work, as they say. Are you expecting any competition?
Oh, of course.
Okay.
Of course, yeah.
So I got to ask you, how much in terms of fees are you charging for this one? And, do you expect competition to intensify? And how do you look at fees moving forward then?
Sure. So for this one, the fee is 1.99%. It's like 199 basis point. From a lot of people's view, it's not cheap. But for this, it's not cheap.
But an interesting
But it's the only one in the market, at least in Asia, right?
No,
Yeah.
but the thing is, in the U.S., they have an S&P CME Bitcoin Futures Daily 2 times leverage, and it's the largest leverage crypto ETF, and it has $1.7 billion in asset management, and their management fee is 1.9%.
Yeah.
And so For leverage and inverse, you can charge more.
The reason is because the leverage and inverse one, we are not encouraging people to hold a long period of time. It's only for pretty much for trading. So the maximum time is like 7 days or 2 weeks, something like that. And we encourage people to hold these products, shorter, like 2 to 3 days. So for them, 199 basis point divided like 2 day, 1 day is like half basis point. It's really nothing, but they just try to catch up the momentum.
And that was the CSOP Asset Management CEO Chen there. Of course, you can find more episodes of Tiger Money on Apple Podcasts, Spotify, YouTube, and Bloomberg.com. New episodes drop every second Tuesday. Don't want to miss those conversations with our very own Rebecca Sin, as well as David Ingles. Now, we got some breaking news here right now. So this is according to the Associated Press, where Kamala Harris has enough pledged delegates for the nomination here right now. So the threshold that she had to hit was basically 1,976 delegates. It seems like at this point she has reached that number. But again, that delegate support will not be official until next month when we see the DNC. So certainly that's going to be the key thing here. We have seen, of course, the vice president really quickly consolidate support here in the last 24, 48 hours or so from powerful Democrats. Nancy Pelosi certainly was the latest big name to endorse her for that presidential bid, but really trying to make a way to unite this party and end this turmoil that really has consumed the Democrats, and hopefully try to change the dynamics of this election. And obviously we've been talking about what this means for the Trump campaign, a fresh challenge, of course, for the Republicans as well. So there you go. A lot of momentum right now with Vice President Kamala Harris now getting enough endorsements, enough delegates for that nomination, according to the AP. We're going to have more from D.C. in the next hour. Plenty more ahead. This is Bloomberg. Here's your China Brief this morning. A look at what's making headlines in national newspapers and trending on social media. The China Securities Journal spoke with experts who say the PBOC's cut in the 7-day reverse repo rate does not mean there is room for long-term bond yields to fall further. The article warns investors to continue paying attention to risks in the bond market. So once again, trying to pull some cool water into this bond rally. Meanwhile, the Economic Information Daily quoting experts who say the issuance of government bonds will accelerate significantly in the third quarter. They see the notes boosting infrastructure investment in the latter part of this year. Meanwhile, the Global Times has published an editorial touting China's industrial innovation. The piece says creating fake political barriers will not impact China's development. The article emphasizes how China relies on a pool of high-quality talent and market competition, while highlighting the growing number of foreign firms setting up R&D centers in China. And over on Chinese social media, it really is one hot topic that people are talking about, the U.S. election, obviously. Just a few minutes ago, we brought you that news from the Associated Press that the path to a nomination for Kamala Harris seems to be getting a little bit clearer. She has, according to the AP, secured enough delegates that have pledged to secure that nomination for president for her. Keep in mind, though, they mentioned that the official count we won't get until maybe August during the Democratic National Convention. But China has really avoided officially commenting on Harris's late entry into the U.S. presidential race, but social media users are keeping a close watch. Let's bring in Min Lo, our China correspondent. She joins us now on what people are saying online about this shakeup in the U.S.
Yes, lots of chatter on Chinese social media, and that hashtag Biden exits now has over 500 million views on the Chinese social media platform Weibo, and it seems like more people are betting on a Trump win because according to an online poll on Weibo of 12,000 people, 8 in 10 respondents believe that Trump is going to win, and more people, it seems, are also in favor of him after especially that attempted assassination, really expressing that he has shown so much great courage in the face of vulnerability. And also analysts, however, say that regardless of whether it's Trump or Harris or Biden, there's not going to be substantial differences in their China policy, and it's a matter of personality and style. Let's take a look at some of the quotes by Chinese social media users. If we can show that the quotes, there's one on Trump that says he is invincible, he's a shoo-in now. Let's take a look at the ones on Kamala Harris. Not so many votes of confidence. Let's flip the chart. This one says, isn't there a better candidate? It feels as if Biden has a better chance than her. Let's flip the board again. Another comment here that says she hasn't achieved anything except for that impressive laugh. Flip the board. I think there's a positive comment that we have seen as well that says she is an American national character, straightforward, unrestrained, cheerful, and has an easy manner.
And it's interesting because some Chinese experts have weighed in on this. They've been quoted by state-linked media commenting on the U.S. elections, but some of those have been taken down now.
Yes, so there's been an article on the state-linked tabloid Global Times, which quoted Chinese experts as saying that Kamala Harris's performance in the White House so far has been mediocre, that she doesn't have the achievements and the experience to be a strong president. And this, of course, comes as she also has less exposure to China. It's interesting that foreign analysts are saying that she doesn't have a track record in China. She doesn't have the sort of long-standing relationships with leaders like President Xi. She has never been to Beijing, although she's met with President Xi on the sidelines of the APEC summit in Bangkok. So some analysts are saying that she will really need to build up her trust with her national security advisors to guide her on her China policy. And I believe that article was taken down because it conflicts with China's official view not to comment on the U.S. elections, saying that it is the U.S. internal affairs, and that's always something that China holds dear. It doesn't want other countries to also comment on China's internal politics as well.
All right, Min, thank you. Min Lo there, our China correspondent with the latest there, of course, on the U.S. elections and what netizens are saying in China about it. And let's check on markets here right now. It looks like for the most part, Greater China is actually not taking part in this rally here right now. But the chip stocks, there you go. That's where you're seeing that rebound really taking place here. Taiwan Semi is up 2.5%. That's helping the TAIEX really avoid that correction, which we've been watching out for as well. And we're watching overall. There you go. CSI 300 down some 0.6%. This is Bloomberg. Welcome back to the China Show. 30 minutes into the session, and here you go. You are seeing basically Greater China markets not taking part in this market rebound that we're seeing in the region. And the CSI 300 is lower by about 0.6%. So some pronounced moves here right now. The China, what you're seeing in Shenzhen, you're actually seeing now extending those losses to more than 1%. So certainly one thing to look ahead to with a lack of catalyst really after that third plenum. I'm Yvonne Man in Hong Kong.
And I'm Haidi, Stroud-Watts in Sydney. Really a pleasure to be with you on the China Show today. But Yvonne, let's take a look at the broader markets, which are, as you say, seeing those gains. Of course, export we're seeing in China. Taking a look at some of the trading and pricing action around Asia, we're seeing some pretty good gains, particularly coming back from that rebound in Japan, rising at the prospect of stronger earnings growth. That really kind of mostly correlated to what we saw in U.S. equity markets as well. Exporters in particular, some of those tech firms in Tokyo also seeing similar tech-related gains for the cost as well. Here in Australia, we're also still trading pretty close to those record highs as we get that rebound here across Aussie equities, about 0.7% higher. There are still some global kind of growth concerns and tied back to those China growth concerns as well. If you take a look at one of the laggard asset classes, it would be some of these minerals and metals. Copper hitting that new 3-month low, the weakness in Chinese demand in focus. So clearly that rate cut that we saw, not enough to boost sentiment across the raw materials and metals sector, Yvonne.
Yeah, so that certainly is the standout here today with CSI 300 against really the broad markets, which are actually, shrugging off maybe some of the political noise out in the U.S. and really kind of focusing on more of the fundamentals back into those chip stocks in particular, as you mentioned. And that certainly is sort of the sentiment that we heard from this MLI Pulse survey that just came out, where we asked about the impact of these U.S. elections on exposure to stocks, for example. And for the most part, most people are thinking, look, there seems to be still some traction here, but they're still waiting for the results of the U.S. election before changing their U.S. stocks exposure. 82% say no right now because they're still eyeing what? The Fed. You still got earnings. So those are still going to be those main drivers, really, of U.S. stock prices moving forward.
Yeah, and I suppose then the question is, you know, are you looking for exposure in terms of these investors to the so-called Trump trade, or now we're talking about the Harris trade as well, right? The basket of stocks that might benefit should we see a successful Harris presidency, you know, as she sort of vies for that candidacy at the minute. But, you know, lots of questions and lots of questions when it comes to what we see for the direction of the US dollar too, right?
Yeah, there's been so much chatter about what this means, right? If we see a Trump victory, does that mean that the dollar continues to stay strong? And I think most of the big banks, everything from Deutsche Bank to Barclays to Standard Chartered, in the last 24 hours have come up with notes basically saying, I think it's going to be stronger dollar, because even if you talk about what Trump's stance is and how he favors a softer dollar, the tariff risk alone, they say, warrants some sort of dollar rally. Which brings us to our next discussion, of course, and bringing Mark Cranfield, our MLife strategist, and he's been joining us here right now. You've been focusing a little bit more on the renminbi in particular here today. It's a pretty slow day, Mark, so we can focus on maybe a possible new trading range for dollar China. What is it now?
Yeah, I think actually it's a good example of what you were just discussing there about a so-called dollar trade after the US elections in November. I think investors need to be very careful about blanketing the US dollar against all currencies. It's going to be very nuanced. Whoever wins the US presidential election in November, the outcome for the US dollar clearly is not one directional. And the Chinese currency is a very good example of what people can expect in the months ahead. Because don't forget, whenever you think about currencies, it's a two-sided game. You have the one side, you've got in this case, you've got China, what they do with monetary policy, what they do with fiscal policy. On the other side, you've got the United States and what they're going to do as well. So if you look at here, this move this week by China to lower the reserve repo rate is in the context of what China is doing, is a relatively early aggressive move. And it clearly is them setting priorities of what they want to achieve. They're very focused on trying to get their economy, the onshore local economy, back into some sort of sustainable growth. And they realize there are risks attached to that, because if they move ahead of the Federal Reserve lowering interest rates, obviously exposes the currency to potential weakness. But they've obviously decided that is a risk they can live with, and they manage it very carefully through the daily fixing. As you saw today, there was a little bit of pushback in the fixing today. They didn't allow it to go any higher than it was yesterday, even though the implication from the market was that dollar yuan should have been set a little bit higher than it was on Monday, but they held back. And they will probably continue to do. There'll be this push and pull between the fixing and the actual market rates. Eventually, dollar yuan will be allowed to drift higher, but at a pace dictated by the central bank. And this will take out some of the steam. Some of the risk will already be out the way before we even get to November, regardless of who wins the US presidential election. But you can see there is definitely the possibility building here that what happens to the yuan is not representative of the dollar trade. We may have, for example, a completely different direction for the Japanese currency, because the Bank of Japan is going the other way. Bank of Japan is more likely to tighten policy. That could be good for the Japanese yen at the time when the Fed is starting to lower rates. So people need to be careful and think carefully about which currency against the dollar plays out.
I'm glad you mentioned the BOJ, because there is a risk that they hold next week if they are weighing the weakness in domestic consumption. So quickly, do you think we're going to see a reversal of dollar yen trading going into the end of the month?
It would be surprising if the Bank of Japan don't do something. So even if they delay an actual rate hike, there's a very good chance they will reduce JGB purchases, and by a substantial amount. They've already met with the dealers. They've given them the heads up. So the yen will probably get some support, even if it doesn't get the full weight of a double policy tightening for the Bank of Japan. It's likely to get something, and that's probably going to help the yen get a bit stronger in the near term.
MLife strategist Mark Cranfield there. And let's get some more on US politics, because Vice President Kamala Harris now reportedly has more than enough pledged delegates to clinch the Democratic presidential nomination. And an official AP tally shows that she has crossed over the magic number of 1,976 delegates. Let's bring in with some more from Bloomberg's Yvonne Quinn, who joins us out of Washington. And Yvonne, we saw, after the initial news, a very quick coalescing of key supporters for VP Harris.
Exactly, and even more today. And Haidi, as you mentioned, it now looks like she has clinched the nomination. It won't be fully finalised until the DNC. But at this point, are you really going to challenge Kamala Harris if the number of delegates has now crossed 1,976, with, in just the last few minutes, Texas, Ohio and Nevada delegates pledging their support? So it really looks like a done deal. This is something that the Democratic Party would have wished for in order for the momentum to continue throughout the week and for Kamala Harris to start to get herself out there. Right? Obviously, she has name recognition. She's been the VP, but she wants to start talking to the public now, to campaign, to put her issues front and forward, and to show people how she's actually going to take on Donald Trump in November. She actually already began to do that today. It was before President Biden had spoken to the nation, which he intends to do later this week, but he did call in as she was addressing her campaign staff, and that sort of allowed her then to begin the process of campaigning, which she really did. She said that she was going to take Donald Trump on, that she had, in her past life as an Attorney General, taken on fraudsters and cheaters, effectively saying that, you know, he was one of those.
It's interesting just how the Democratic Party has really rallied behind her in just 48 hours, essentially, Vonnie. What are going to be her vulnerabilities? I mean, what are some things that she needs to work on really to continue to narrow that gap with former President Trump?
Well, for Democrats in general at the moment, swing states are vulnerabilities, and that's going to be Kamala Harris's pain point as well, right? And that's where a VP pick might come in handy, although the data suggests that sometimes a VP pick from a swing state doesn't necessarily bring that swing state with you. However, there are potential candidates from Kentucky, from Pennsylvania, from North Carolina, and some other swing states that she is considering and that the FBI is now vetting. We may know before the Democratic National Convention who she picks. That might be an important step forward. Tomorrow, she's actually going to a swing state. She's beginning her campaigning in Wisconsin, in Milwaukee, Wisconsin, which was, remember, the site of the RNC. So she's visiting there tomorrow to make her first real campaign stop. So that's a vulnerability, obviously, in terms of voters. But then she also has strength as well. She's the first potential female, potential Asian woman, potential black woman to become president should she win. That's going to bring a whole lot of the segments of U.S. society into her fold, potentially. Suburban women will be in her corner, very likely. At least that's what the Democrats want, because those were the types of people that led Biden to the White House 4 years ago.
All right, Vonnie, thank you. Vonnie Quinn joining us live from Washington this evening. Coming up on the China Show, we're heading to the movies. Oh, yeah. Have you watched it? The action from Hong Kong's most watched local film this year. We're talking about Twilight of the Warriors, Walled In. One of our producers has watched it 5 times already. Just want to say that. But yes, we're talking to the production company behind this big hit. They join us next to discuss the state of China's movie industry, alongside the CEO of IMAX China, which is planning to expand in the mainland, even as consumers turn more frugal. That segment coming up next. This is Bloomberg. Welcome back. It is a quiet day, so we've got to let's talk about the movies, right? We're at the midway point of the summer box office season in China, and the latest data does show that ticket revenue surpassing 6 billion renminbi, with crime and comedy the biggest draws so far. Now, that number, though, that is still lagging last year, when cinemas took in just over 20 billion renminbi across the summer period from June to the end of August. And according to data from tracking platform Manwaring, this year's box office takings could be the slowest since 2014, excluding the COVID-affected years of 2020 through to 2022. Now, one of the movies leading the box office, though, and really driving this charge, is this Hong Kong action feature. Have you seen it yet? Twilight of the Warriors, Walled In. Manwaring estimates it took in $107 million in both the mainland and Hong Kong. And it's been one of Hong Kong's most watched local films, attracting almost 1.6 million viewers since it debuted on May 1st. Joining us now, I'm pleased to bring in IMAX China CEO Daniel Manwaring. Also with us is Media Asia Group CEO C.T. Yip. Thank you so much, gentlemen, for joining us. I got to start with you, Daniel. because you just became the IMAX China CEO pretty recently, but obviously we've been talking about the summer season maybe losing a bit of steam, but we saw a roaring start at the beginning of the year as well. Are we likely to see more of a rebound?
Yeah, I think the summer's taken a little bit more time to really kick off. I think the biggest movies of the summer have yet to really come out. Starting later this month on the 26th, there's 2 big films coming out, and then in August we've got another third one. By the way, 2 of those are actually shot with IMAX cameras, which is something that we're going to be expanding a lot. Between now and the end of next year, we actually have 7 IMAX titles. These are Chinese films that are shot with IMAX cameras. It's the most we've ever had in the company's history. So I think it did get a little bit of a slow start to the summer, but the next few weeks we're going to start to see that pick up.
CT, I mean, you've been collaborating with China producers and the like and making these films as well. I mean, what do you think is going to be driving that market rebound then in China?
Well, firstly, we're involved in the second one, the one that's going to be showing on the 3rd of August. So we're very excited with that. So I think what's driving is, firstly, you got to have new stories, a new way of telling stories, and a lot of these directors from mainland China are doing that very, very well.
You mentioned that the growth of the consumer market is still intact. There's a sense that consumers are a little bit more frugal these days. How does that impact, do you think, box office sales, and how are their tastes changing when it comes to movies now?
Sure. I think on a long-term basis, I think the economy of China is still going to grow, because the theme of urbanization is still here. I mean, for a country of 1.4 billion people. So in the long run, growth, or economic growth, is a no-brainer. And if you look at what you mentioned, frugality, in terms of ticket prices, this is really relatively lower consumption in terms of the overall consumer segments, right? So as a result, we're still very, very bullish on that.
Daniel, it's Haidi in Sydney here, and I'm wondering if you feel the same way, because obviously all the headlines are about the economic weakness and the weakness in household spending and discretionary spending. Are you seeing that being reflected in demand, and does that kind of give you less confident about expanding to more screens across the country?
I think it affects at different levels. So for IMAX, which is a very premium brand in the country, we're actually pretty confident about the market right now. And when we see younger people being more particular about how they spend their money, they're spending it on premium experiences. And so, that's been driving our business for so long. It's an area that we're going to be expanding, not just in our network. We recently signed a very large deal, the biggest deal actually in the last 5 years for the company, with Wanda, which covers over 123 sites over the next 4 years. However, what we're going to be seeing a lot more of is different experiences. I think the key here is really providing that premium experience, whether it's watching a film, whether it's seeing a concert in IMAX, or seeing a video game championship. We're going to be opening the aperture of our content offerings, and as long as that remains in a really premium way, I think that consumer will continue to show up.
And the government reopening to Hollywood titles has been pretty gradual. I do wonder if, as you look ahead, obviously, to the November US election, is there optimism perhaps that, whichever new cabinet or sort of consistent cabinet we end up getting, is there the opportunity to bring more US titles to the Chinese market?
So I think what's really interesting is, for the last 18 months, we've seen really positive support from the Chinese Film Bureau. Most Hollywood titles this year are getting day and date releases, which is very different than several years ago. So, I'm not someone to take bets on politics, but I don't see that policy changing very much. I do think we will continue to see favorable release dates for foreign films, Hollywood titles in China, and particularly in 2025, where we have a very robust slate. Avatar 3 is coming out next year. I think it's important to note, too, the strike from last year had a very large impact on this year and a lot of the releases that got pushed. But we don't see a huge barrier to that releasing from a policy standpoint.
And CT, it seems like a lot of the biggest blockbusters we've seen from China has been local titles.
Yes.
There seems to be this trend that Chinese moviegoers are less interested in foreign films, especially when it comes to U.S. movies. Do you think this is a lasting trend? And will Hollywood kind of take a smaller role now?
So again, we're very optimistic in terms of the twin engines of growth, right? So you mentioned that the domestically produced films are getting more popular. I mean, for 2023 alone, over 80% of the market share has been domestically produced movies. But having said that, if you look at the movies that were successful last year or even this year, the big movies are getting bigger, and the quality are really high, right? So what I'm saying is that it's popular for a reason, because it's high quality and people are attracted to high quality movies. And at the same time, the industry welcomes more Hollywood films being brought back into China again.
Yeah.
So we really see, these two engines of growth, and hopefully the Hollywood movies of high quality as well.
The Hong Kong film industry, I mean, I think has really helped the Chinese film industry grow the past few decades or so. Now you see China throwing a lot more capital into their own movies. They have their own expertise, their own movie stars here right now. Could Hong Kong actually get squeezed eventually from some of these the homegrown market?
Right. So I think, again, the movie industry is a very competitive one, right? So for Hollywood movies, you have to compete with these domestically produced movies. And same for Hong Kong. I mean, if Hollywood is under pressure, Hong Kong is under pressure too. So the way that we would protect our own market standings is to really make high-quality, better movies that are acceptable to the audience in China.
Daniel, I'll get to you. There's obviously a lot of upcoming releases coming, and I think Deadpool and Wolverine is the big one for this summer. Disney making a comeback in China. How big is that going to be, you think?
Look, the fact that Deadpool even got into China, I think, was something to celebrate. That's a very hard R superhero movie, right? Something that you wouldn't have seen get in years ago. So we were really excited to see that get through censorship there. I think it's going to be big. I mean, the franchise is well followed in China. It's certainly one of the most anticipated global movies of the year. I think in Hong Kong in particular, it's going to do very, very well as well.
Also, when it comes to just overall Hong Kong's box office.
Sure.
I don't think we're quite back to pre-pandemic levels here right now. When do you think we'll get there, CT?
So I think, firstly, whether we will ever get back there is a function of what the industry ourselves do, right? So if you look at the U.S. box office, for example, I think it did close to $9 billion last year in terms of U.S. domestic. At its peak, I think it's $11 billion, which was in 2019. And for the last 10, 15 years, it's always been above $10 billion annual. So the U.S. is also, struggling to get back there. And it's a function of many things, right? It's a function of, streaming platforms being very popular. And Hong Kong, the Hong Kong industry is also facing similar issues, right? But at the same time, the opportunities just across the border, either in the Greater Bay Area or just China as a whole, is humongous, right? So we shouldn't look at Hong Kong itself as Hong Kong. It really is the bigger picture that we should be looking at. And it's the same language as Chinese language films.
CT, the bigger picture is also international markets too, right? How do you sort of see that as a priority and some of the challenges perhaps of marketing and promotion and highlighting these films, in non-Chinese speaking markets?
Sure, I think, in terms of marketing Chinese language films, I think historically it's always been difficult, to be really honest, because the Chinese culture is a distinct culture, right? So we try, and historically you've seen many blockbusters that emanated from China and also Hong Kong. One example is The Infernal Affairs, which was an Oscar-winning movie, but it was
one of my favorites, by the way.
Thank you very much. And it was, a remake from the Infernal Affairs trilogy that Media Asia made, many years ago. So we did it, and we hope to do it again together with, hopefully many of these younger, talented directors from China. And again, it really is not just the story, but also how you tell the story. So, we'll work hard and try to do it again.
Real quickly, overall, how do you see this movie industry growing in the next 5-10 years maybe or so?
So I think we're going to continue to see a lot of local language films break out. I think it's going to be a combination of Hollywood titles and local language. We're certainly doubling down on the number of IMAX Chinese films that we're doing. Last year, I believe our box office of Chinese local language made up about 61% of our total box office. We did approximately 37 IMAX films for China. Local language. I think growth is going to come from new experiences. So the NBA finals we did in Hong Kong and Taiwan, we sold out 100% of the tickets in 1 hour. Wow. Okay. Taylor Swift, we did earlier in the year, on January 1st, we contributed 50% of the box office. Again, 100% of the tickets sold out. Most of those audiences were people that hadn't been to a theater in probably 3 to 5 years, and they were coming for a new experience. Go ahead.
Yeah, no, we got to leave it there. We're running out of time, but thank you so much. Daniel Manwaring there, IMAX China CEO, also CT Yip, Media Asia Group CEO. Pleasure to have you guys both on this very interesting topic. We got plenty more ahead. This is Bloomberg.
We are seeing that broad rebound here in Asia, some of that recovery from the tech and chip-driven sell-off. One of the movers that we're watching is Kakao Bank. We actually saw divergent trades earlier, but now both Kakao Bank and Kakao Corp trading lower after the founder, Brian Kim, was arrested over allegations of market manipulation. It is 11:29 a.m. in Tokyo, where Japanese markets are going on that break in just a minute, and they're going off on a high note today, with stocks rising at the prospect of stronger earnings following those leads that we saw in U.S. equity markets on Wall Street. Exporters in particular today seeing that revival. Tech firms in Tokyo leading those gains. We also saw some shippers as well climbing after Nippon Yusen raised operating income guidance there. We're seeing really outperformance by both the Topics and the Nikkei. Some of the exporter strength continues to play out. Toyota Motors, the biggest gain there in the contribution. Of course, a lot of uncertainty, Yvonne, though, going into this Bank of Japan meeting at the end of the month.
Yeah, I mean, you got the Fed and the BOJ all meeting that week as well, so certainly that's going to be quite interesting for traders out there. And really with the BOJ, officials are said to see weakness in consumer spending, complicating their decision next week over whether to raise interest rates. Let's get to our Brian Fowler, Asia Economy and Government Senior Editor. He joins us now from Tokyo. So, Brian, what are you guys hearing here? I mean, could we actually see another rate hike next week?
Well, I can't quite answer that question, but I can tell you it's going to be a really exciting, dramatic meeting. There's going to be a lot of discussion on what to do because the factors are really pushing in two directions. So on the consumption side, we've seen some weak data lately. In May, household spending unexpectedly fell. We also saw real wages fall more than expected in that same month. And that kind of cast a cloud over the BOJ's contention that it's moving towards a virtuous cycle of wage gains feeding into higher spending and then that pushing demand-led inflation. So there's some doubt on that end. On the other hand, the national CPI for June picked up for a second straight month and has been above the BOJ's target for 27 straight months. So that indicates inflationary pressure is fairly sustained. So you could go either way. The bottom line, I think, is the BOJ could say, look, inflation is sustained, and even if we hike rates, settings will be relatively easy in a global context. But at this point, the majority of economists we've spoken to say they expect the BOJ to stand pat next week.
You talk about a virtuous cycle. It's probably too early to start talking about that for the yen, right? Is there a pretty big risk that we're back to weakness for the yen if the BOJ holds?
Yeah, so we've seen the yen stabilize a little bit in recent days, but I think that is a big thing to watch, Heidi. We've seen politicians lately, which is a little unusual. Politicians talking a lot about monetary policy and what it does to the yen. Taro Kono, a big heavyweight in the LDP last week, and then today we had LDP Secretary General Motegi. They were both saying the BOJ should raise interest rates in order to support the yen and put a cap on inflationary pressure. Now, whether the BOJ listens to that or not is another question. The BOJ, of course, is an independent central bank and needs to also maintain the appearance of being independent. So we don't really know how that will play out. But as you mentioned earlier, we have the Fed and coming, and speculation is growing now that U.S. economic data are starting to soften a little bit. Inflation is showing signs of cooling. Next week we'll have GDP from the U.S. and we'll also have the PCE deflator on Friday. And both of those data sets are expected to support the narrative that U.S. economy is cooling and that the Fed could cut interest rates as early as in September. And that would take a lot of pressure off the BOJ to hike.
Yeah, you mentioned some big data points in the U.S. What about for Japan? I mean, is there anything in the Japan pipeline that we need to watch out for?
Yeah, so there are two main data sets, I think, between now and the decision on Friday this week. The big one is Tokyo CPI for July. The core figure that excludes fresh foods is expected to show a tiny bit of acceleration. Now, that would be, if so, that would be a kind of greenish signal for the BOJ. Maybe not a huge green signal, but the BOJ could certainly cite that as a factor encouraging a rate hike if it wanted to do so. And then next week, on the day of the decision, we have retail sales coming out, and that speaks to the whole issue about consumption. Those numbers can be a little bit volatile, but they are expected to show a fairly robust underlying trend for spending. So that'll probably go into the discussions.
Lots to watch out for. Our Asia Economy and Government Senior Editor Brian Fowler there in Tokyo. Well, India's first budget under a new coalition government is expected to stick to a plan of curbing the fiscal deficit while still cutting taxes and boosting welfare spending. Finance Minister Nirmala Sitharaman is set to unveil the annual fiscal plan later on Tuesday. Let's bring in our South Asia Economy Editor Rupee Bhatia there in New Delhi. So, Rupee, we had a little bit of a preview. So what do we know?
Well, what we do know that it is going to be a fine and a delicate balancing act for Prime Minister Narendra Modi. This is going to be his first budget under a coalition government, and one really has to see whether he will be able to adapt to the compromises that are really needed in a coalition government. Remember, Modi lost a majority, and he had to bank on his coalition partners in the elections that were held last month. And from here, we really have to see whether he will be able to adapt to the needs of the coalition government and also at the same time be able to spend enough to boost India's growth and also keep up with his welfare policies and at the same time reduce the fiscal deficit to a level to keep the rating agencies happy. Remember, India is on or throes of a ratings upgrade, so one really has to see what kind of a balancing act we will see in this budget. Having said that, the government does get some amount of headroom from the RBI, a $25 billion headroom from the surplus transfer of the central bank that the central government has. Along with that, the revenues have also grown pretty strong, almost 20% up, so far as we can see, and that will give the government some headroom to be able to lower their fiscal deficit number to about 5% from 5.1% that was of the GDP that was set earlier in the interim budget. That's something that the markets would certainly be looking out for. That number is going to be very critical. Having said that, we will also have to see whether Finance Minister Sitharaman in her 7th budget will be able to keep up with the spending plan and spending, especially in critical areas such as infrastructure, in being able to boost manufacturing and, as I said, lift various other sections of the economy that are not doing so well. Focus on some sort of rural welfare schemes as well.
Boosting manufacturing, creating jobs, that's also a priority for the government, Rupee. And we certainly saw in that economic survey, they spoke about it. What can the finance minister do about that?
Well, in fact, in the economic survey, it was for the first time that we, got a recognition from the government that there is a need to create jobs. The economic survey talks about, and this is a survey that, remember, comes one day before the budget, that really sets a policy roadmap, so to say, for the government, where there is, an acknowledgement that India needs to create about 8 million jobs annually until 2030, and we also need to be able to skill the vast, young population. So what kind of steps we will see in this budget will be very, very critical and crucial to watch. We also do know that Finance Minister Nirmala Sitharaman perhaps may also look at various steps to boost manufacturing. There's been a lot of emphasis given on the production-linked incentive schemes so far to boost manufacturing. Will there be any more areas? There's been a call for getting the PLI schemes in sectors such as footwear, such as leather, furniture as well, toys. These are sectors that traditionally employ a lot of people. Whether there will be some incentives that will be given for some of these schemes is also something that we will have to wait and watch out for.
All right, Rupee, thank you. Rupee Bhatia there, our South Asia economy editor, joining us out of New Delhi. We're seeing Nifty futures are pretty flat here this morning ahead of that budget. We got plenty more ahead. This is Bloomberg.
One of the sectors we're following at the moment is Philippine casinos. We had, of course, the Philippine president outlawing online casinos catering to Chinese gamblers, really responding to these calls to shut down an industry that he says has been stoking crimes, including money laundering transactions. You're taking a look at a bit of a split picture there. Certainly the likes of Double Dragon seeing some steep losses, a little bit lighter when it comes to Mega World, but Bloomberg Resorts up by just about 0.6%. We did hear from the Finance Secretary, Ralph Recto, saying that overall the banning of these offshore gambling operations won't have a significant impact on the economy. Let's bring in Bloomberg's Avril Hong there, who joins us with a few more details about this. And so give us a sort of, I guess, the historic reasoning and rationale behind this decision.
Yeah, I think, what's driving this move is Marcos responding to calls about how the sector seems to have fueled crime, including, as you mentioned earlier, money laundering, but also financial scams. So he's essentially just outlawing, banning these offshore gaming operators that cater specifically to Chinese gamblers. And this is coming at the time where there's been a pretty high-profile investigation into a mayor, and, she's been accused of money laundering via entities that have links to these offshore gaming operators. It's also seen in a way as a departure perhaps from his predecessor, Rodrigo Duterte, who during his time in office shifted foreign policy towards China. We saw these offshore gaming operators really flourishing then, and tens of thousands of Chinese nationals descending onto Manila, that spurred property prices, that spurred consumption. So this move is a ban that took effect yesterday. He's essentially telling these gaming regulators, wind things down, shut down the facilities by the end of the year. And it's interesting also, he's told the economic managers of the country, try to find new jobs for some of these workers that are going to be displaced.
Yeah, we heard from the finance minister saying there might not be a big economic impact from shutting this industry. What is a likely impact then?
Yeah, I think it's worth noting that we have seen about $170 million annually that the sector contributes to state coffers. That being said, that's a number that has been dwindling. It's essentially been coming down. And to your point, we heard from the finance chief not long after Marcos came through with his ban, really backing the president up, saying there's not going to be a sizable impact to the economy. Simple reason, because the costs far outweigh the benefits. When they crunched the numbers, they looked at the estimates, they accounted for, some of these reputational risks, the risk to tourism. So longer term, maybe this ban is seen as something that is good for the Philippine economy. And indeed, we're also seeing, maybe some benefits for these local casino operators and real estate developers in time to come as well, guys.
Avra Hong there in Singapore. Coming up, we're going to take a look at how Chinese EV maker Zeekr plans to further its international expansion while avoiding EU tariffs. Our exclusive with the CEO is next. This is Bloomberg.
Welcome back. Some top corporate stories we're following for you today. Delta Airlines says it expects to cancel more flights this week as it tries to recover from a crippling technology outage. The airline canceled more than 800 flights on Monday, bringing its total since Friday's meltdown to more than 4,600. More than half of Delta's worldwide IT systems rely on Microsoft's Windows operating system, affected by the software error. Porsche has cut its full-year revenue forecast, saying a shortage of aluminum parts could force it to stop production of some models. The car maker expects revenue of up to $43 billion. That's down from its previous forecast as much as $45 billion. Supply shortage is a result of flooding at a production facility of an important European supplier. And Berkshire Hathaway has sold off another block of BYD shares, taking its stake in one of the world's biggest car makers in under 5%. That's down from more than 20% 2 years ago, and dropping below 5% means Warren Buffett's firm is no longer obligated to disclose any further sales. Buffett saw a 2,000% gain from his early bet on BYD.
Well, Yvonne, Zeekr, this is, of course, a premium EV maker under the Chinese auto conglomerate Geely, is considering using European production to avoid EU tariffs. The CEO, Andy An, told us exclusively about the brand's global growth ambitions, including the launch of a new offering in Hong Kong.
Zeekr is a global brand and a luxury high-end brand. As to why we had our launch in Hong Kong, everyone knows Hong Kong is a leader in the use of multi-purpose vehicles and the birthplace of luxury MPVs. This release is very meaningful as this is a global launch, targeting global markets for simultaneous sale. This is a very important turning point for our global strategy and planning.
Let's talk about international markets, because we are seeing a wall of tariffs from the US, EU, possibly Canada, and Turkey as well has just announced 40% tariffs on Chinese EVs. So how big of a blow are these tariffs on your overseas expansion plans?
Of course, regarding the introduction of these policies, I personally express my regret. I think these decisions are not right. For us, we very much follow international free trade. I should say for Zeekr's international development, there will be a certain impact. As for how to face this impact, I think we can plan for the short, medium to long term as a whole. First, I think we need to work hard to improve our brand image, boost our technological competitiveness, our high-quality products, and a good service experience for users. Second, we should consider localized production in each area. For example, in Europe, Geely has been making cars for 30 years and has been proactive in building the foundation for internationalization. So in the future, we won't rule out using the resources of our holding group's partners to compete in the market. We are now proactively pushing for localization work in Europe.
Let's talk about the mainland China market, because now there is a very brutal price war going on, and I believe you've been operating on a net loss. Last year it was a loss of over 1 billion yuan on a revenue of over 7 billion yuan. So how long can you survive this price war, and how long do you think it will last?
Indeed, right now China's EV market is very competitive. The price war competition is relatively intense. I feel we cannot just rely on price wars to win an edge in the market. An enterprise, it relies on its brand, its sales, its good financial performance, and good products to win competitiveness in the market. I also believe, as our sales increase in China and outside of China, and the brand further improves, I believe our financial performance will be better. Our target this year is to work hard to achieve profitability or break even for the full year by Hong Kong accounting standards.
I want to talk about your IPO in May because you had a very strong IPO in the US, but since then we have seen your share price on the decline and it's now trading below the IPO price. What is your outlook and why should investors keep buying your stock?
There have been some fluctuations in the stock price in the 2 months or so since the IPO. I'm filled with confidence about Zeekr's future development. We're more focused on future good sales performance and improvement in our brand to bring good financial results. And through this hard work, I believe the market and investors will give Zeekr a fair and reasonable valuation.
Zeekr CEO Andy An there speaking exclusively with our China correspondent Min Lo. Interesting that we're talking about EVs. Obviously, we've been focusing on that BYD story, but certainly when you take a look at what the big tech names are doing here today, it seems like we are seeing quite a bit of recovery here, and in fact, really kind of recovering what we saw from that meltdown yesterday. So Taiwan Semi certainly is helping to drive those gains in the TAIEX here today. We're up some close to 3%. We were watching to see if, in fact, we would get into correction territory in the TAIEX. It doesn't look like we're going to be heading to that direction here today. Hanhai's up close to 4%. So Taiwan Tech is certainly doing quite well here today. Overall, we're talking about global macro movers also. Which is what's really driving stocks to gain and recover after, of course, all this political risk and the shakeup in Washington that really continues to kind of roil market sentiment. That seems to be changing here today. People are kind of shrugging it off and looking at other things as well. So that's why TAIEX is the leader on the board here. We talked about how Greater China, especially when it comes to Shanghai, not really taking part in this. So we continue to see sentiment quite weak in China post-plenum. The Politburo meeting could be the next sort of catalyst to watch, though, but we are seeing some sizable losses onshore right now. We're down about 0.9%. And the dollar is a little bit weaker across Asia FX here today. Not that much pushback from the PBOC, according to Mark Cranfield, with that fix here today of maybe allowing for that higher trading range for dollar China. And then, of course, we're watching very closely commodities, continue to see base metals get hit. Oil also tracking some of the losses that we saw overnight here as well, Heidi. But you see iron ore, that's down close to 2% in Singapore. And there's a lot of talk about, these Trump trades, obviously. That's one thing, whether we need to be focused on them. Is that really going to be a strategy moving forward, what we had 4 months ago before this U.S. election? But there's been a lot of talk about what a Trump presidency means for the dollar, really.
Yeah, exactly. It doesn't necessarily mean a weaker currency because that's what the former president prefers, for his jawboning. There's a lot of concerns over what it means for the Fed, right? We spoke with the Mercer CIO a little bit earlier, and he says there's perhaps more likelihood that the Fed will stay on hold rather than becoming part of this, kind of turbulent fray of politics as we go into November. But I do wonder how you kind of equate a weaker dollar with the prospect of, he says he wants pro-growth, which then means pro-inflation. Does that then mean that the Fed will have to, stay more hawkish? And I know that we've certainly heard from a lot of strategists that suggest that a stronger dollar is still what they expect.
Yeah, if you look at the Trump policies that have been laid out, whether it's tariffs, the prospect for, less regulation, lower rates. I mean, they all think that's inflationary for one thing, and for one thing, it's going to lead to the dollar to gain. And even if you exclude, what it could take, the cost of intervening into the dollar to soften it, as Trump may have highlighted, which may highlight his stance, the tariff threat alone, according to Barclays, is enough to suggest that the dollar can actually gain from here on forward here. Obviously, there's a lot of talk from Citi. They had a call earlier about it really depends when it comes to China exports, how they implement these tariffs, right? Is it something that's going to be more selective, that it doesn't really hurt the supply chains of the U.S.? They don't think it's going to be that concerning in their eyes.
We're talking Talking movies earlier, I feel like we're going to need that popcorn and kind of strap in for the next few weeks, for the next 4 years, perhaps, Yvonne. But coming up, stay tuned. We've got more from our exclusive interview with the Meta CEO and founder, Mark Zuckerberg. His views on AI, on China, The Circle with Emily Chang. That's on Bloomberg TV and Bloomberg Originals. This is Bloomberg.